Thank you everyone for being here. My name is Mark. I am an accountant here on the Central Coast. Have been for over 10 years. I've had my own practice for a big chunk of that. So yeah, I'm here to talk about some common things that I see. I've got quite a few people in the creative, creative world that I have helped over the years, and will continue to help in terms of getting up to date and staying up to date with their tax and accounting things. So that's what I'm here to do today. I'd like to say thanks for Kev for hosting today. I'm sure, I'm sure all of us will be here again to experience live music here. I'm sure it'll be a good experience for us all. And I'd like to thank CCMA as well. I have my own practice here on the coast. I deal with a lot of people in the industry. I grew up with a lot of people in the industry as well. So I do know what kind of struggles and things that, to stay on top of things that you face. So here to help with some things to keep in mind moving forward, and some things that make life easier as well, and potentially keep costs down if you do see an accountant. So we do a lot of tax and compliance and helping with that side of things. We also have a bit of a mortgage broking side of our business as well, where we kind of work with our clients in terms of what you kind of need to work towards if you have specific goals you want to reach as well. So that's what we do. We will be going through a number of topics today. These are the main things that we'll be going through. So we've got ABNs and different business structures that we can all be operating through. So there's a few things to note here. Invoicing, what to keep in mind with that side of things. Tax time and what you need to be doing when it comes to doing tax returns, keeping up with other things like BAS if that's something that you have to do, and some things that potentially specific to the industry in terms of what can be claimed and what you should not be missing out on. Tax is obviously a major part of it. A lot of people here would do it as a side hustle, so it's a matter of trying to make sure that you're not getting hit with big tax bills at the end of each year, and trying to stay on top of that side of things as well. So there'll be some tips about that. The other big thing is record keeping and staying with that as well. So a major part will be discussing just some easy ways to make it easier for yourselves and for that time of the year when it comes around, and just during as well, just so you're not dealing with a lot of things from 12 months past when the time comes. We'll discuss superannuation, whether you should be putting some money into that if you're in that position. Subcontractors and what to keep in mind when you do pay subcontractors. Obviously that's a major thing as well, whether you're working with different people that are subbing in because other band members can't make it, or whether it's you working as a subcontractor for someone else, what to make sure you're doing as well. And then just questions as well. I imagine that's a big chunk of it as well. So any questions, feel free to ask at the end. We'll have a section for that. But as I'm going along the way as well, feel free to just ask any questions you might have as I'm going through. It'll be easier that way anyway. So. Before I get started as well, what kind of, so obviously we've got creatives of all sorts here. Do we have a lot of people in the music industry? Are we arts, creative? What kind of creatives do we have here? Mostly musicians? Yeah? Yeah. What else do we have? Anyone else? No? Okay, cool. Okay, so firstly we'll discuss ABNs. So in order to obviously start being able to invoice and start obviously doing gigs, whatever it might be, you essentially need an ABN. So ABN is something you can apply for online. It's relatively straightforward. So you essentially answer some questions about what you have in mind or what you plan on doing, and then obviously provide your own details, and it will provide you with an ABN. Sometimes it doesn't happen immediately. Sometimes it does take them some time to process it, but you should get that relatively quickly. It allows you to be able to invoice, and you'll obviously have to then report the ABN business income and expenses in your tax return as a consequence of that. So if you have nothing that's happened throughout the year, you'll have to also let them know of that. But essentially, you'll need to essentially lodge your return for that year, and you'll essentially have to put in there your ABN income and expenses. So if that's nil, then so be it. That's no real issue, but you do have to let them know. So an ABN is similar to a tax file number. Once you've applied for one for yourself as a sole trader, that will be one that stays with you for your entire life. Whether you deactivate it, whether you reactivate it, you always get the same tax file number, same ABN. That's linked to your tax file number, so that will always be the same. So it's not going to be too much. So if you stop using it for 5-10 years and you reactivate it, will be the same one that you get again. There's a lot of websites on when you look up registering an ABN that will charge you a fee for it. Don't go through those options because you're paying a fee for a very simple process, which you're going to be doing either way. So it should be a free thing to do. So if you're paying for it, there's a free government website to do it, which is quite easy to find as well. When you're registering an ABN as well, there's usually a little section asked if you're GST registered. Most people starting out, make sure you don't tick yes. Adds compliance, adds other things that you need to be keeping in mind as you go on, and extra things to be worrying about. So make sure you don't tick that just yet, unless your circumstance.
I did actually tick the box stupidly enough. I registered the business on the 4th of July last year.
Yep.
But I went to the ATO website and deregistered back on the same day, so hopefully I'll just accept that. So the accounting period, I think, was 12 months.
Yeah.
So I don't have to do a return, obviously, until the end of the financial year. There's been virtually no income. The only income I have is going to be foreign income for all these
Yeah.
streaming platforms.
Yeah.
So that'd be fine to do that.
Yeah, just to make sure you put that into your tax return. Fantastic. Just jump on your MyGov, and you'll be able to essentially jump on and change that GST registration back to nil and not required. As I said, if you do, then you'll have BASs cropping up every quarter, every year, depending on what you've ticked, which you may not need to be doing, and tax you may not be needing to pay just yet. So, but yeah, in your circumstance, exactly right. Just do the return. Just make sure you put those royalties in there. Any expenses you've had for those royalties, whether it's subscriptions, anything at all, just make sure you put it against it so you're not paying additional tax that you don't need to. The only time you do need to register for GST is if when your income's to a specific level, which I will discuss a bit later on. When you are registering as a sole trader and you want to register a specific business name, again, there's plenty of platforms online which will charge you a fee much bigger than what it needs to be. Those are the fees you should be paying. And again, all through a government website, straightforward. Just need to choose the name, make sure it's available, and then pay $44 for a year or $102 for 3 years. When it comes up for renewal, they'll send you an email because you'll need to put in your email address. So they'll send you a renewal form about that, and you'll just need to, again, go through this process, steps, fill in the details, and continue on. But again, make sure you're not paying $200 for a 1-year business name or $200 or $300 for a 3-year business name, because you can do it on the government website for those prices up there. The other thing to think about is the different structures that you can be operating through. The main one would be sole traders. You've also got partnerships, you've got a company, you've got trust. So you've got plenty of different options to choose from. There's obviously pros and cons about all of them. There's obviously different circumstances which would require different of these entities. The most common ones will be your sole traders and partnerships. It's the lowest cost, it's pretty straightforward, and it just, the others will require a bit more cost to it and require a lot more compliance with the ATO as well. So the main common ones will be sole trader partnership, and then, as I said, the others will be only in some more specific circumstances when the income's much higher and you want to start keeping tax down even to a different point. So, so as a sole trader, it's, as I said earlier, free. It's the easiest to set up. It's essentially you, yourself, your tax file number, you personally, that ABN is connected to you.
How many can go into a partnership?
So it's more than 2 and up to 20.
So that would be like for a band, for example, would that be a good structure for a band?
Yes, yeah. It depends what kind of things the band is doing. Obviously, if it gets to the point where they're doing, obviously have a lot more income, it might be beneficial to go into a different structure, company. But usually a partnership is a good way to start because it's quite easy to do the transition later when you get to the stage of needing it. But until that point, partnership is just a low-cost option. Yeah, and for example, with sole trader, you just need to, when you do your personal tax return, there's a business schedule on that. Just make sure you put in your business income and expenses in that when you're filling it out. Again, it's a section of the MyGov. If you see an accountant, they'll just go through the questions with you anyway. With a partnership, as Lou mentioned, it's great for bands. It's great for a group of people. It's a good way of having a bank account for everyone that's involved in the partnership to have the income coming through, the expenses going through, and then, obviously whatever's left after you pay those expenses will be distributed based on the partners there and the original agreement as well. So with a partnership, so when you apply for a partnership, again, free process through the ATO, you will have an ABN, a tax file number related to the partnership, completely separate to your personal ABN. It will be a tax return that you'll need to prepare for the partnership, completely separate to your personal sole trader tax return as well. When you do the return, again, you'll need your income from all the things related for it. You'll need expenses for all the things related, whether it's travel, whether it's accommodation when you're traveling for different gigs, whatever it might be. All the expenses need to go in there, and we look at the income, take off those expenses. What's left will be distributed based on the distribution of the partnership. So, for example, you can have a partnership set up where one partner is 60, the other's 40. So then whatever's profit left over will go 60-40 to those different people. You can have it 50-50, whatever works for you. But it will always get distributed at the end of the year based on those percentages. It's not something you can change from year to year. So obviously once you've got that set up, just make sure you stick to the same percentage every year. And as mentioned before, it's got its own tax file number and ABN. So when you're invoicing for anything that you're doing collectively, just use that ABN and make sure you're putting that on your invoices. It's also good to have a written agreement between everyone involved just to keep things above board. If there's any issues, any dramas, it just makes it easier for everyone. And make sure that the bank account, because obviously you can set up a bank account in the partnership name with that ABN, make sure that that one is also available to everyone just so that everyone can see what's happening involved in the partnership. And again, reduces dramas, just a general thing I feel it makes it a bit easier. With something like a company, there's quite a few benefits with it, but there is quite a few costs to it. So it's not something I generally recommend early on, or it's only something that once we get to that stage, I'd say to you, if you came in, I'd say to you, for example, look, now's the time to look at changing into a different structure, and usually the main purpose for that is tax, and to reduce that and how much you're paying. It's generally for bigger operations, so it's generally more suited to producers, studios, different things like that, where the income's quite high. With a company, it is a separate legal entity, which is a benefit for yourself and your assets. So if there's a particular, if you get finance for anything, if there's anything that goes south, goes negative, and there's potentially some money owing there, it is limited to what's in the company. So you personally and your personal assets are all protected. So obviously if you've got house or anything to your name, it's a good way to protect yourself. It's usually something I recommend again when it's a bigger operation, when there's a bit more involved. With the other things to keep in note, there's other things you have to keep in mind with the company, for example, saying it's paying super, for example, potentially taking out tax, there's annual ASIC fees, so there's plenty involved there. So again, it's not something that I generally recommend, but that's would be best time to talk to your accountant. Trust, similar things, similar costs, and similar concept of it all. It's provides the same, security, provides the same benefits. It gives you a little bit more flexibility with where you distribute income, but again, it's suited for more bigger operations. Generally, if you're not sure, generally the first is to start as a sole trader. It's nice and simple, straightforward. When you get to the point above that, that's when it's best to have a chat with an accountant. So generally I recommend if you're doing sole trader and you're confident with what you're doing, stay that way, and obviously you can do everything that's required for it yourself, whether it's tax returns, whether it's, again, if you're comfortable. It will become a bit more important to see an accountant once you get to the realm of potentially becoming a company or trust. The last thing here is GST registration. So GST is only required to be registered if your income, so this is just your income, not after expenses, just the amount of income coming through, is over 75,000. So over 75,000, it then becomes a legal requirement for you to register for GST. You'll be required to do potentially quarterly lodgements with the ATO, reporting the amount of income that you've received in that quarter and the amount of expenses you've had in that quarter. So yeah, look, generally it's not too much of a concern, but it is a big reason why, again, make sure you don't tick that GST registered button when you're applying for an ABN, because it does provide a lot of more headaches if you will. If you do get to that stage and you need to it, then obviously it is something you need to do. So you'll need to register for GST, and you'll need to pay, you essentially need to charge 10% extra, which is that GST portion, and you need to make sure you pay that onto the ATO, and make sure you do that every quarter as well. So yeah, it does include a lot more regular, essentially regular work, and you make sure you have to keep on top of things every quarter rather than letting it, build up a little bit. So you have to do that every quarter, and yeah, it's unfortunately adds a lot of work, which I wouldn't recommend unless you need to. The next thing we'll be talking about will be invoicing. So when you're invoicing, these are the general things that you need to make sure you've put on your invoices. This is something I've got from the ATO website. So the ATO website is a great resource for you if you're looking for different things. There's also, if you generally look up questions you might have, you'll find that someone else has asked it on the community ATO website, and there'll be someone from the ATO that's replied. So that's a great resource to use for any circumstance. But for this one, in this situation, it gives you the perfect example of what's required. The first thing you need to make sure you've got the tax invoice on top of the invoice itself. So you make sure that's essentially titled. You need to make sure that you've got your personal name, business name, company name, whatever the situation may be, on the top as well. That's number 2 then. So in this case, it's obviously different business, but you essentially need to make sure that whether it's your sole trader names or whether it's your full name, whether it's your business name that you've got registered, you'll need to make sure that that's on the top. You'll need to make sure that your ABN is on the top as well, and you need to make sure that that number's on there. You'll also need to have the date of the invoice and when it was prepared and sent out. And you also need to have on there the details of the person you provided the service for. So if it's someone that make sure you've got the name there and the full name of the person you provide the service for. In the main body of the invoice, you need to make sure you've got what the service was that you provided. If you've got obviously quantity, and you have to put in, generally a lot of businesses like to have a breakdown of what's been invoiced, just to help them, identify what it was, and it's a good way to be transparent with them. So generally having a breakdown is good for the businesses that you doing the work for. You'll also need to make sure that, again, in this case, we've got GST. If you're not registered for GST, that will just be nil. So make sure you've got nil in that line, and then you've got the totals at the bottom, and make sure that you've got the total price includes GST as well. Obviously, if the GST is 0, then GST of that portion will be 0. Any questions about that? Generally, if you use any kind of accounting software, that will be pretty standard on there. So all those details, generally, all you'll have to do is provide obviously your business name, your ABN, and then who you're working for, and that will also come on when you're paying the invoice. Generally, the top 2 parts are just set up on default, and then you need to fill out the rest. So some of the better practices when you do send out invoices is to make sure you put in the clear terms, make sure you put in when you are wanting payment and what the payment terms are. So generally within 7 days, whether it's immediately, whether it's end of month. So make sure you've got that clearly stated, just so that there's no excuses. Make sure you invoice pretty quickly after you've done the job, just so it's still fresh in their heads and something that they will make sure that you remember and have in mind. The quicker you do it, the better it is. Obviously, if you've done the job and you've done a good job and it's happened immediately, they're usually more likely to pay quickly. And then make sure you follow up politely as well. Don't let it wait too long where it completely becomes something faded. Just follow up relatively quickly and politely, just to make sure that you stay on top of their head. There's plenty of different templates you can use. You can prepare them using Word, you can use Google Docs if you don't have access to Word. You can use it using Excel, Google Sheets. So there's plenty of different templates on both of those. Whether you look online or whether you go through the actual templates on Excel, for example, you'll find an invoice there. You can use something like Canva, and there's obviously specific invoicing apps like Invoice2Go. And there's obviously accounting softwares like your Xero and QuickBooks as well, which offer that option. There is some free ones out there. Just have a look. Generally, when you try one, they're free. They usually have a limit how many you send, but there is some that you can do a bit more than that. So have a look and see what best fits you and what you want. As I said, you can always do one on Word or Excel. Another good thing to do is utilize things like Stripe. So you can set up a Stripe account and put the details on that on your invoice so that it prompts people to pay, and it gives them a credit card option. So a lot of businesses like to pay using credit card, whether it's for them to accrue some points or whether it's just for cash flow purposes like might be for yourself. It's a good way for them to be able to pay you without having the cost immediately to them, because they might have a bit more payment terms. Another option is to use something like a Square machine, where you can just take payment over the phone when you're at jobs. It's all about making sure you get that payment as soon as possible. Cash flow is obviously very important. Whether it's your side hustle or not, it's good to make sure you get payment as soon as possible and make it as easy as possible for them, because the easier you make it, the higher likelihood of you getting paid, essentially. So, payment terms in terms of getting immediately to, in a month, it can make a big difference. So just, make sure and make it as easy as possible for them. It's also good if you're going to do a gig, you can potentially ask for a deposit to secure your booking. So it's a good way to potentially ask for that, when you secure the booking itself. That's good for you to get a bit of a, payment. If they don't pay the rest, you've at least got something up front. And it also makes them more likely to keep the booking as well, because they've paid something and they know they will lose that if they don't go ahead with it. So it's a good way to kind of keep them to it and make sure that they actually keep the actual gig and pay you the rest as well. So now we go into the some tax areas that we can, some tips essentially that we can claim, some things to keep note of when it comes time, because it will help reduce your potential tax bills as well. So firstly, again, as soon as you've got the ABN, you need to lodge a tax return. So that's something you'll need to do, whether you want to or not. It's something you're going to have to do. So you will need to lodge a return. Even if it's not something you're making a lot of income from, you'll have to put that in. You have to put in the income expenses of it all. It's actually also beneficial to do it if your expenses are more than your income. Even if you don't have profit in that year, or you haven't made money that year, and you don't make money the next year, it's good to put those expenses through. It builds up a bit of a loss there, which you can move forward to the following year. So for example, if you have $1,000 worth of expenses in gear that you bought this year and next year, but no income, you've got $2,000 worth of expenses 2 years on to use against any income in that year. So it's very handy to make sure you put them in your return, make sure you put them in, make sure you build up those losses which you can only use against the income moving forward. So again, even if it's 5 years without anything, if you put them in and then after 5 years you do make some money, you'll actually have to use up all those expenses and all those losses from those previous 5 years before you start paying tax. So that's quite regularly seen that it's missed. So make sure you do that. And obviously a lot of gear you buy up front, and you may not make income with just yet, but you will have a lot of expenses moving forward and starting off as well. In terms of things we can claim, just broken it down some different areas there. So for music, for band expenses, so obviously any instruments you're buying, any amps, any gear at all, any studio hire, anything like that, that's all things we can claim. Anything that's required with touring, so obviously if you're doing any gigs anywhere, whether it's accommodation for where you're staying, whether it's flights if you have to fly there, anything at all that's related to the accommodation for that tour is something that you can claim. I generally recommend that you make sure you keep record, whether it's if you've done a trip somewhere, make sure you keep somewhat of a record of that whole trip. So you've done a trip to wherever it might be, accommodation linked with that, whatever else you had while you were there, even eating costs. So obviously while you're there, if you're eating anything there at all, that's all something you can claim, because it's a cost of you making income. So make sure that you keep those. Yep.
Is there a daily limit on how much food per person you can have? So like say we're a band of 4.
Yep.
Is there a limit like 75 a day per person or something like that?
No, look, if you're traveling away, obviously if it gets to the point where it's a few beers and gets to the point where it might not be deductible, but anything that's just general food, you go into local grocery to get some things, that's all things you can claim. So hold on to those. Yeah. In terms of anything for any other artists, look, anything at all that if you're using it to make your income, it's something you can claim. So essentially, if it helps you to earn that income and you've got the connection between the income you're making and the expense, it's something you can claim. So hold on to it. And if you're not sure, best to hold on to it. Again, if you use an accountant like myself, ask them and they'll say yes or no. If they say no, it's obviously nothing lost. And if they say yes, obviously it's great that you kept it. So always hold on to them and ask the question. It's always worth the question. Some other deductions, big couple of different ones. So we've got, if you're renting and you've obviously got a weekly rent and you have a room in that house that you use for recording, for practice, you can potentially look at the size of that room as compared to the rest of the house and potentially claim that percentage of your rent. So if your rent is $500 per week and your room is 1/5, you can potentially claim $100 per week of your rent because that room is made specific for you practicing, so you can claim that. So again, if not against that year's income, if you put it in, make sure you store it, it will potentially help you out in the future. Okay. Same thing with your phone, internet. If you're using, again, it's all based about that percentage and working out a bit of percentage. So usually what the ATO will ask for both of those is how you came to that percentage and obviously bills. So obviously bills will be quite easy to find. With a percentage for your home office, as I mentioned, if you've got a floor map, which you generally get when you're looking for a place to rent, Just look at the size of that floor space in that room compared to the rest of the house. For your home and for your mobile and internet, they generally want some kind of 4-week log. It's a bit of a grey area what you need to put in, but if you just put in what you're using for personal compared to business, that gives you a bit of percentage what you can claim. Other subscription costs, whether it's anything for music editing or video editing, whatever it might be, it can be claimed. So that's all things that can be claimed. If there's any advertising, if you're doing any logos, any album arts, anything at all, that's all things we can claim as well. If you're still doing courses and education, also things you can claim, and everything else there. So you've got any accounting fees. If you do see an account, that's all something you can claim. Insurance fees at all, that's all things you can claim as well. The big one is car costs as well. So with car, we've got a few different options. We can claim up to 5,000 kilometers. So with up to 5,000 kilometers, you don't physically need a logbook for that. If you obviously, again, you've obviously got records of what gigs you've done when you've traveled there. So if you can go through round trip to these different places, you can work out how many kilometers that is. Obviously, if you've done one big trip up to Brisbane from here, that's obviously going to use a big chunk, so it makes it quite straightforward. So 5,000 Ks is usually a really nice deduction. It's a good way to bring that down immediately without having to keep too many receipts. As I said, you've obviously got the invoice that you've done the work, you've obviously got the accommodation there, so you driving there is not a big thing in terms of proving that to the ATO. So it's quite an easy way to claim kilometres. If you want to claim any more than 5,000 kilometres, that's when you have to do a bit more record keeping, so you need to keep a logbook for 12 weeks. Usually that 12 weeks needs to be in consecutive weeks, and you generally need to make sure that that logbook starts in the financial year. So if you want to claim car travel using a logbook method for the 2025 year, make sure that it at least starts in the year. If it goes well beyond the year, that's fine, as long as it starts in that year, or at least it's got part of the year in there. The beauty of keeping that logbook is that you'll be able to use that for 5 years, unless your circumstances change. Unless your obviously income drastically reduces, income drastically increases, you can obviously, then the ATO might require to do another one. But if it stays relatively steady, you can use that logbook for about 5 years without any issues. Again, if the ATO asks, you just need to show them that logbook from that period of time, and they'll be happily accept that.
I've got a quick question. As an arts worker, so if I'm, for example, running a festival, what sort of things can I claim, like sunglasses if we're outside, that sort of thing?
Yeah, look, generally protective clothing is a perfect one. So protective clothing is an easy one to claim. In terms of clothing, it is a bit of a grey area what you can claim there, and the ATO will more likely want you not to claim it. And essentially they can ask you how it relates, and they can accuse you that it's not work related, and it'll be up to you to prove them otherwise. So with clothing it is a bit difficult. Anything protective, you've obviously got a bit more to work with because it's protective in nature. So they obviously encourage that. So you can claim obviously those things. You can claim travel there, potentially you can claim potentially the ticket there. Again, with the ticket to go to specifically, you have to make sure the connection's there. The main thing is that connection. That's what they'll want.
So because like obviously I'm more of an arts worker.
Yeah.
When I go to a lot of shows, to what extent can I book concerts as well? To what extent can I like claim those sort of
Is your income as an employee or through an ABN? ABN, yeah. Look, you can claim again if you have a connection. So you just need to make sure you've got a bit of connection there. If you've got the connection, you can claim as much as you have. So if it's related to your income at all, and you can draw that connection, that's all they want to see.
So if bands are wanting to go to other concerts, they can possibly claim their concert tickets.
Yeah. Again, it would be a bit of a grey area in terms of the relationship between that and the income. So that will be the hard part for that case. Look, if a member of that band ends up being a member of your band, perfect. That's a good enough explanation. So it's just a matter of making sure you've got a bit of connection there. If there's nothing there, that's when I would recommend not claiming it. Yeah, look, the research one is a very regular one, and yeah, look, it will depend. I would recommend depend on what kind of circumstances looking. So if you're to the point where you've got, obviously to the point of you building up too much losses, I wouldn't recommend pushing it too much. If you're the point where you have to pay a fair bit of tax and you want to reduce that, it may be beneficial to put some through. So it kind of have to be reasonable about it, and you look at it in a reasonable way, and what the ATO would look at it as well. So that's the main thing to keep in mind there. That's the main things really for you guys to be claiming. With the logbook, if you do have it for 12 weeks, you can claim all the car costs related to that. So whether it's fuel, whether it's insurance, whether it's registration, whether it's if you bought a new car and you're paying it off, you can potentially have interest that you're claiming on it. You can, if it's a new car, you might have depreciation left. So there's plenty of things that can be claimed there that will help reduce your profit at the end of it and reduce your tax as well. So if you're doing a lot of work car travel, well beyond the 5,000 kilometers, and it's usually going to be recommended that you use that logbook method. Even if you've got a little small car as a runaround car for when you do personal trips, and another car for when you do trips as a band, or for when you do gigs, usually that obviously gives you more scope to work, and you can potentially claim 100% of the one that you're using for work. So as long as you can show the ATO that you've got a car that you use for personal use. So they'll just ask those questions that you would generally be unsure of, but they'll ask them. So you have to make sure that you've got a bit of a response for that, and you've got a bit of a reasoning why you're doing what you're doing. Yeah, so if you've got one car, you can essentially, when you do that logbook, that's what you're doing. You're putting in every trip you do, whether it's personal or work, you're just putting in every trip. The requirement for the ATO is just 12 weeks. So if you get to that 12-week, if you're doing the 12-week, make sure it's a 12-week where you've got a lot of gigs, firstly. Secondly, if you've got the 12 weeks again, make sure you've got each trip in there. We'll look at all the kilometers you traveled through that time, and we'll look at what's related to your business. Yeah, so essentially once we've got that logbook, so let's say you've had 80% of your kilometers during that 12-week period was for work, for business, then we can claim 80% of your fuel for the entire year, 80% of your insurance for that year, 80% of all the car costs, 80% of the cost of the car itself. One car is fine, as long as you've got that logbook. Yeah.
Does the home office and studio apply to homeowners or just rent?
It does, but it causes other issues. So if you're a homeowner and you've been claiming 10% of, for example, 10% of your home, then if you ever sell that, you might have capital gains on 10% of your home. So, and if you're a homeowner, probably not recommended, and I wouldn't say you should do it. Obviously, different circumstances might be different situations, but generally, I wouldn't recommend it.
This one with the subscriptions would so say for an artist, if just YouTube and say if they subscribe to have a verified account on Instagram, would that count under subscriptions as well?
Yeah. Obviously, the Instagram account is going to be the business name, so there's the link there.
Yeah, and then that YouTube.
Yeah. So yeah, obviously subscriptions is the ever-growing one, so that's all generally things we can claim. Anything else for this area? Yep.
With the car costs, what about percentages of say rego and things like that?
Yeah, so once we've got that 80% in that example before, it's 80% of your rego as well. So literally everything related to that business, to that car, that's all 80% we're claiming of it. So everything at all. If you had to, put in $1,000 worth of repairs, 80% of that $1,000 is something you can claim. Yeah. So, yeah.
This one might be reaching a little bit, but say if Netflix, if people are watching music documentaries, can they claim Netflix on Netflix?
I wouldn't recommend Netflix. No. No. I wouldn't recommend anything that you would get a fair bit of normal entertainment from. As I said, if you've got something on Instagram, different story, but yeah.
I've got a question.
Yeah.
How about if you bought musical equipment with a grant funding? How do you deal with that when it comes to tax? Can you claim that or?
So it will depend on what grant it is. So different grants will have different ways you need to treat that. If it's a grant that is something you need to treat as something taxable income, then it obviously needs to go in as income for you. Generally, the equipment you purchase should be something you can claim. There shouldn't be too much of an issue there. unless there's specific things in the grant that tell you not to. Yeah.
Is there still the is it $20,000 taxable claim? Forget what it's called.
Yeah.
That's still.
Yeah, so that's still there. So anything under, so for example, let's say you bought a car for work and you've got that logbook and it's below 20,000 and you got it for, say you got it for $10,000, 8,000 of that you can claim in one go in that first tax return that you buy it, and it can be used against future income and profit. So so that's still around. I don't see that changing either. Instant asset write-off. Yeah. Yeah, so that's only available to an ABN. So if you are getting paid as an employee, you don't have access to that. But if you have an ABN and you're operating a business, whether it's partnership, whether it's sole trader, whether it's all those, that's something you have access to. Yeah. Yeah. Yeah.
With musical instruments,
Yep.
depreciation, is there a cut-off period?
So anything under 20, you can claim it in one go. You've got the option of doing that, or you can claim it over depreciating over the number of years that its life is for. So if you look it up, you can generally find out how much effective life is. So you can either depreciate it over that effective life, or you can write it off in one go if it's under that 20,000 limit and it's still around. So if it's depreciating, obviously, then it will be depreciating that year and the following year and continue on, and it should roll over in your MyGov if you do your return. If you see an account, it should roll over in their system as well, so that will keep track there. You just need to make sure you have the receipt.
So is there a time period where that will stop depreciating?
Generally, so if you've got an asset which has an effective life of 5 years, that will stop depreciating after 5 years, and within that 5 years, it will be claimed entirely. Does that answer your question?
For example, if you had a guitar,
Yep.
it's going to last your lifetime.
Yep.
How long?
So generally, with something like guitar, you can look up what the depreciation rate is. So the ATO have different assets and what kind of lifetime they expect from them. So if you look it up, it will potentially say 5, 10 years, whatever it might be, and you will essentially claim that within that 5 years. And it will be depreciated from the full value to zero within that 5 years. Yeah. So it just depends on whatever the instrument or the gear is, and it will also depend on how much the ATO believe it has a life of. That being said, if you, for example, had some instruments or whatever it might be for 5 years, its value is down to zero, but you end up selling it for $1,000, then that technically has to be reported as income. So that's the other side of it. So if it's the value of it's now zero, but you end up selling it for something, then technically that's income because you've been able to claim the expense of it, but it's still got value to it.
Say you got a guitar on you won a scholarship, it's like $1,000, and then you end up paying $200 on top of that. Can you still technically claim that $200? You just can't claim the scholarship part.
Yeah, so you'll probably be able to claim the whole thing. So if you've got a $1,200 guitar, you could probably still claim that whole $1,200. Yeah, it should be able to still. Anything else? No? But look, there's just general deductions. It's as long as you have receipts for everything, hold on to those and keep them. Usually need to keep them 5 years after you've lodged the return. So from that point on, keep it 5 years. If you're depreciating it, it's 5 years so essentially 5 years from when you finish claiming it or get rid of it. So that's obviously lengthens how much longer you need to hold on to the receipt for. The next thing we'll be doing is record keeping. So this is a particular area of concern amongst my clients who are in the industry. So generally, this is the hardest part about it, is holding on to records during the time, and then obviously having to go through a whole lot of receipts if you still have them in order to not be paying a lot of tax. So generally with a lot of income that you receive, that's the ATO are starting to find different ways to make sure they have record of that. So in terms of the income side, the ATO have different ways of finding where you're making income. Expenses they don't particularly care about because they want you to pay tax. So that's up to you. That's what you are trying to do and keep track of. Obviously the income is something you need to do as well, but the expenses is something you need to pay particular attention to. One of the first things I recommend when you set up is have a business account. So set up a business account. It doesn't necessarily need to be a business account with the bank, but just earmark it for business income and expenses. Make sure that the only things going through there are your business income and expenses. So that way, if you're looking at the end of the year, you can safely think to yourself, okay, all the income in here is business, all the expenses in here are somehow related to my income, so can be claimed. So whether you're doing it yourself or you're getting an account, you can potentially jump on your internet banking, get an export from your internet banking in an Excel spreadsheet, sort it out, and it makes life so much easier for everyone involved. As I said, whether you do it yourselves, whether you do it through an account, that's generally what I'm going to ask as the first question to make it easier. If you are doing it yourself, you make sure you don't miss things, you make sure you don't miss little expenses which you might have completely forgotten about 12 months after the year's finished, because that's how long it can take. So it's a good way to make sure you're claiming all you can. And if you see an account, it's a good way to keep your tax bill down as well, because otherwise, if a client account's going through receipts, it's going to cost them more time, which will potentially cost you more cost as well. And then with that business account, if you obviously want to take money out of it for yourself and through the work you're doing, just transfer it out to your personal account and call it drawings. But yeah, use that business account for your income, for all your expenses, for your travel costs, for your car costs, everything else that you relate to the business, tolls, whatever it might be. If you haven't done that and you want to stay on top of it as it happens, the other option is using something like a spreadsheet and filling it in relatively regular when it's still fresh in your mind. Again, the hardest thing is thinking back to 12 months, seeing an expense from 12 months ago in your bank account thinking, what's this? So if you have a spreadsheet that you are looking at, if you have a Google Sheets that you fill in every month, every couple of weeks after you've done a gig somewhere, whatever it might be, it just makes it easier. It makes it easier to keep track. And again, it's something you can give your client, your accountant, or you can use yourself to do the tax return and refer to. You can use accounting softwares, and that again makes life easier. The little problem with accounting software is they usually have a cost, and if you're not making much income, it's not something you potentially want to be paying. So there's obviously a subscription cost, whether it's monthly or annually, some of them offer. There is a cost for different accounting softwares. It does allow you to do invoices through there and keeps it all in one place. But the only way it's effective is if you also use one business account for all your business transactions. If you're not doing that, the accounting software is going to be pretty hard to keep track of anyway. So I'd recommend if you are using accounting software, make sure you use that bank account as well. The subscription cost for the accounting software is something you can claim as the upside of it though. The other hard thing, if you obviously again haven't had that, even if you have a bank account which you've used for business, make sure you take photos of your receipts. It's easy to lose them, it's easy to misplace them, it's easy for them to fade. If you take photos of them, put them in a folder, in an album, in your phone, it's the easiest way of doing it. And you can, again, when it comes to the year, you can even put them in different financial years, and when you come, you can just scroll through, make sure you've got everything in there. It's the best way of doing it, and makes it easier for yourself as well, and harder to lose. And generally, it obviously backs up, so it's not only on your phone, so obviously it will back up onto the cloud that you've got anyway. So there's also the ATO app, which is handy for taking photos and keeping receipts, and it will ask you for details as well. So that's another option as well. And there's plenty of other apps as well that you pay for, but you can easily have a look at what's out there. But the ATO and just taking photos is the free and easy way of doing it. And if you do have an accounting software, as I said, it allows you to have everything that we've discussed all in the one place if you're using it properly. It allows you to have all your income and expenses in the one place. So it does make that easier for you. Again, to make it useful though, you need to be using one business account for everything. Otherwise it just loses its potential there. And with that, you can do different reports every quarter, every year to see what kind of year it's looking like. And help you see what's working, what's not. So, and obviously any emails that you receive with invoices, just again, set up a folder in your emails, call it receipts, tax receipts, and just put everything in there. Just makes it easier. So superannuation, as a sole trader, it's not something you need to be paying. It's not something you have the obligation to contribute to. So you won't get into any issues with the ATO if you don't pay super. So that's a good thing because you don't want more issues there. But obviously you can make those contributions if you decide to. So if you've got, if you've had a year where you've made more income than you expected and you want to put some money into super to for your retirement, for example, then you can do that and it will save you on tax as well. So you can use it as a tax deduction, so anything you do. So that's also an option. Again, not something you're required, but you can choose to do that. With other different business structures, it may be mandatory. So that's when, again, recommend to have a chat to the accountant. Yeah.
What's the limit for putting your own money into a super account? It's like you can't just do as much as you like.
No, so your general, so for example, the limit in the year that we're in now is 30,000. So if you have a job and you receive super from your job, that uses up some of that 30,000. So you will have left over the 30,000 minus what they've paid into your super and they've contributed in there. If you can potentially put in more than that if you've got access to previous years and you haven't used your limit up in previous years. So you do have that option there. Again, in this, it's not going to be that regular, but yeah, if you've got previous years where you haven't used up to that cap, you can then carry that forward and use it up in 1 year. So you do have a few options there.
And the laws now around businesses paying sole traders, they do have to pay now, don't they?
So it's actually a bit of it's an interesting one in terms of if you are working for somebody using your ABN and as a sole trader, the ATO will look at it based on the circumstances. So if you are working as if you're an employee, everything for all intents and purposes is you're an employee, they just want you to use an ABN, then you can go to the ATO and say to them, they're not paying my super, and they will look at the circumstances and potentially push them to pay super for you. So, yeah, in most cases, depends on the circumstances, depends on what the agreement is, depends on the work being done, how the work's being done, the agreement between the two parties. But if they work like an employee and everything they do is like an employee, but they're a contractor for all intents and purposes, then super will be liable for that person. So once you've finished your work with them, maybe not before because they might stop working with you, go to the ATO and they will potentially chase them and do everything required on their end, and all you have to do is alarm them to it. So yes, it's definitely something that if you're paying subcontractors, it may be something to be paying as well.
Is there a guide on how an artist would know whether they should be eligible for super and should be asking? Like, is there any way?
I think there might be a calculator on the ATO where you ask some questions and you answer it. But there's plenty of resources if you look it up, but there's essentially a list of things where it asks you and you have to essentially say yes or no, and it kind of points you to the positive direction of whether you potentially are liable for super or not. And the other big thing as well is subcontractors, and following on from the super is subcontractors. So again, it's quite common to pay a lot of different subcontractors. If you're in a band, if you're a musician, whatever it might be, subcontractors are quite common. So just make sure if you are using subcontracts, make sure you get that invoice that we looked at before, make sure you're getting that from them so you can claim it. If you don't have that, you can't claim it, which means the income you make, if you don't have anything against it, it's potentially going to put you in a position where you pay more tax than necessary. So make sure you've got an invoice from them, make sure they've got an ABN. If they don't have an invoice, don't have an ABN, it's what you're paying them is not something you can claim. So keep that in mind. And same thing, if you're paying a subcontractor, make sure it's not as if they are an employee and you're just paying them as an ABN, because you may be liable for super as well, is the other side of that. So just make sure that, when they're invoicing, they're providing their own equipment, they're coming in for a job, and that's clearly stated on the invoices. Because if on the invoices they're just putting in the hours they've worked for you, you may be stung for super. So make sure that they're clearly saying, it's for this gig, for this, that they're providing their equipment, just so you can protect yourself there as well. That's the main thing for subcontractors. Any questions there? And in terms of helpful resources, as I said, the ATO, there's plenty of different resources there. When it comes to registering your business name, registering an ABN, there's the ABR website or register.business. And then there's obviously Music New South Wales. There's actually a really good handout from them, which has different structures, different things to watch for, and quite a bit of helpful resources there as well, which I'm sure we can give you access to if you want to. So that's also very useful, but there's plenty of other resources on there as well.
So the difference, if someone, for example, is just starting out and they claim their art as like a hobby, how far up can they do that before they need an ADM? Like, what's the difference between a hobby and working on
Look, as soon as you start generating an income, you would be to the point where the ATO will want you to report it. So, yeah, it's only so much you can get to with saying it's a hobby only.
So if there's some young artists, for example, they're starting out, they're not really making any money, are they able to start out as like a hobby, say as like a visual artist, and they're just sort of...
Yeah, of course, yeah. And if you just, you still have just some expenses, yeah, you're free to not do anything with it, just do it as a hobby. There's no issues with that. The ATO will only care about if there's income that you should be paying tax on. If there's only expenses, they're not going to be too fast. So, in that case, nothing to worry about. But as I said before, the benefit would be of potentially building up some expenses against that income you might have in the future. So, Anything else?
With having like banned bank accounts, should you technically have a main one that's like all your incomes and expenses sits in, and then you have like a separate tax account, it's like a progress saver?
Yep.
You can put on your GST and stuff, even though we're not technically claiming GST, but it's just to have like to show the tax. Look, we kept it in tax.
So the ATO won't really care what you have or what you don't have, so they're not going to mind, but it is a good idea for you personally to have that savings account. So if you have a partnership and you've got obviously profit there, it's good to have a separate account, have it a savings account, work out what you might potentially be up for tax and putting it in there as earmarked for it. So that's great. That's another big recommendation.
Yeah, and then the interest on that, does that still then, you can claim that too, even though it's probably...
So the interest received on that will technically be a bit of income for the partnership. Yeah. So and that will get reported to the ATO, so they'll have information for that. But yeah, if you have one of these things, again, just have an account for your savings, whether it's for tax, whether it's for GST, whatever it might be, just have an account that you're putting it away, and that way you're not getting to the point where you have a big tax bill and no money to pay it. So, yeah.
Foreign income, does it only have to be declared in the financial year that it's received?
Yes, yeah, so it needs to be declared in the year it was received, so based on the date it was received, and it also needs to be reported based on the conversion to AUD. So whether you're looking at how much it was in AUD when it came into your bank account, or whether you're doing a bit of working out the exchange rate at the end of the year, as long as you're putting it in as Australian exchange.
Again, foreign income. If you're earning money overseas, say on a tour to China, paying tax over there, do you still declare that income?
Yes, so for as long as you reside, there's a few things we need to look at in that circumstance, but for as long as you actually live in Australia, we will have to declare any income you've made anywhere in the world in your Australian tax return. If you've paid tax in Canada, we can recognise the tax that you've paid in Canada as tax here. So you're not double downing on the tax. So if you've paid a portion of that in tax over there, then we can recognise that you've paid that tax here and it will reduce your tax bill. So it will get reduced directly off your tax bill here. So so in that case, make sure you have how much tax you've paid there and how much you've received. But you just have to make sure you're an Australian resident, because in that case, that's when it becomes payable.
What about if you're like living somewhere for a year? Like say you move to London and you live there throughout and you've gone out of Australia for tax time, you still have to do tax?
It will depend. This will depend whether you are looked at as residing in Australia for tax purposes or not. Again, there's a little questionnaire on the ATO website which you can go through and answer questions, and it will essentially say, yes, you're an Australian resident for tax purposes, or no. If you are, all that income you've made over there will need to be in your tax return here. You can only be an Australian resident for one purpose, so in one country at a time. So obviously your tax return over there will need to be as a foreign resident there, and it will be an Australian resident here. But again, same thing, any tax paid there you'll get recognised here. Yeah.
So it's kind of similar to those situations, a little bit complex. What if you have dual citizenship?
So dual citizen, It doesn't matter, yeah. As I said, it all depends. The ATO essentially want to know where your home is. So they'll ask you questions, where your furniture is, if you still pay rent at home, but essentially establishing where your actual residence is. It's not a matter of what citizenship you have, it's all about residence.
Is there a situation where if you did earn income and pay tax overseas, that they wouldn't recognise that as tax paid and double tax you?
No. So if you've paid tax overseas and that tax you've paid on income from that overseas source, then that income will need to go into your return here, but the tax paid over there will also be in your return here, so it will reduce the tax here.
Sorry, that just covered my question. What if the tax rate's different when you get a...
Yeah, so so essentially, it doesn't matter what the tax rate is, it's just about
So it's just paid?
Yeah, just the amount paid is all that matters. Yep.
So people not earning any income, so you started out before quite a bit of gear, and they haven't then earned anything that financial year. So you've got all your claims and deductions. How does that work when you haven't claimed any income? Can you hold on to that for the next year?
Yeah, so in that case, and you do think you'll have income, I recommend you obviously set up that ABN, make sure you have that there, and make sure you put all those expenses in your tax return for the year you bought them. So put all those expenses that you bought for the gear in the year that you bought them, so in that tax return. Even if there's no income against it, that's fine. It will just carry forward as expenses, as a loss for the next year, which you can use against income in the next year. Yeah. I think that's all. Cool. Well, thank you all. Yeah.